Meet Kevin is going to lose a lot of money because he had this weird theoretical belief that Tesla would not go down, that in a bear market, Tesla would have pricing power because wealthy people would continue to buy Tesla even if there's a recession. And I don't know why he did this, but he had millions of dollars invested in Tesla stock. I believe it was almost like 18 to 20 million dollars invested in Tesla stock. And it makes absolutely no sense because if you think about it, the stock market is all about valuations, interest rates, and a recession. And Tesla, for the longest period of time, it just had such an amazing move up. And a lot of that had to do with stock investors thinking, hey, this is innovative. No other car manufacturer was going all electric. And it was a cool design. So, of course, when you're first and you see all the other cars, they're not really copying the style, and you're the only one who's doing this, you think, hey, this is like Apple. He really seems to know what he's doing, and the stock has a great number of fanatical buyers. But the truth is, Tesla is going down, and it has nothing to do with Elon Musk tweeting or anything like that, because if you think about it, on the way up, Elon Musk was also doing all kinds of things on Twitter, and it didn't matter. Back then, it was going up. So if Elon Musk going on Twitter causes it to go down, you didn't give him credit when it was going up either. So I mean, that's kind of bizarre. But anyway, it has very little to do with Elon Musk. What's going on is that as the interest rates were rising, Tesla stock, it did a little bit better than the indexes for a while. It wasn't actually crashing or anything like that. But now that we're starting to think, now we're starting to actually also think about the recession that's coming up. People are not willing to pay the multiples and the PE that Tesla is commanding right now. It's a very high PE stock. Most of these car manufacturers are around like 5 to 6. I mean, it's really, really low PE, amazingly enough, for cars. They're not anywhere near where the tech companies were back in the day, like 30, 40, 50. That just isn't the case in the car manufacturing industry. And as these other car manufacturers start basically copying the same idea, using electric, if people want electric, they're going to have quite a number of competitors. So there is no monopoly to Tesla. Tesla has very little proprietary technology that nobody else can copy. Basically, a lot of it can easily be replicated. So there is no moat. There isn't anything that stops someone else from doing the same thing, and possibly even doing it better. Paying 55 or 100 PE, which is what people were doing, made no logical sense. You were basically making the assumption that Tesla would be able to create more and more factories all over the country to produce Tesla automobiles and for demand to skyrocket. And these are some of the most optimistic assumptions possible, and for it to really continue on that pace, it really seems highly unlikely. So the weird thing about it is that for Tesla, it was at some point, it just seemed as though there was all downside and there's no upside, because even if Tesla does the incredible and is able to accomplish this and produce these factories, it's hard to believe the stock could just continue to go up considering the PE ratios that it was at. People were just too bullish and optimistic on the stock, and I think that people don't really realize that the party is over for Tesla. I know a lot of people got burned trying to short this stock for the longest period of time, which kind of makes sense. I mean, for the longest time, people thought, no, this can't go up anymore, and then they just kept getting burned. And of course, Elon Musk had a great time making fun of these people because they were wrong over and over again. But there comes a point in time where a lot of these super stocks, they top out, and eventually they decline quite enormously. Like even for Tesla to go towards near fair value would go down around 90%. I mean, it still would be a pretty big company, but it would be nowhere near the insane valuations that it was. I mean, at one point in time, it was worth like $1.3 trillion as a company. I mean, it's incredible what people are willing to pay. Now, what you're going to see for electric cars is that there will be options. People will be able to buy that from all the car manufacturers. And it just seems unlikely that every single person will choose Tesla. Yeah, a lot of people would choose Tesla, but it's not the only game in town if that's something that someone wants. And usually when you have a competitive market, especially like 10 to 11, 12 brands, that's really tough, especially in the car industry. It's one of the most difficult and competitive businesses out there. Anyway, a lot of people are losing their shirt. I think me, Kevin, is someone who really just doesn't. Somehow he made a lot of money on YouTube. I don't think he really understands finance, and that's despite the fact that he has a ETF, which Tesla is like 60. No, not 60. It's like 15% of the portfolio is just in Tesla, and it's based on this weird theory he has, the pricing power that just absolutely makes no sense. Because it looks to me like he's just overpaying for a stock that is not really going to be able to grow now that interest rates are rising, the recession is coming, and at some point in time, the force of gravity takes over in the stock and it gets pulled down, especially when we're kind of in a late stage debt crisis too. Anyway, let me know what you think about Tesla. Have you been buying Tesla? And hit the like button and subscribe, and I'll see you in the next video.